Happy May, everyone, and welcome back to another one of our Arizona real estate market reviews. We are here for a long conversation about what is actually happening in the Arizona real estate market. As we speak, we're looking back at April's numbers, trending forward into May. What in the whole wide world of real estate is actually happening? So, if that's the conversation that you're here for, you are in exactly the right place. And let's go ahead and launch right in. Let's launch right into those factoid numbers. Now, May is going to be an amazing month, I think. The April numbers are going to tell us a couple of things about what's happening in the Arizona real estate market and what side of the fence are you? Are you a buyer for an Arizona property? Or are you selling your Arizona home? So let's talk real quick. Our supply, that is the number that shows how fast the market is currently moving. How fast are things going off the market? For whatever reason they're coming off the market, how fast are they going off the market? So our supply number went from last month in March from 3.9 months worth of inventory down to 3.5 months of inventory. So picked up a little bit in April, and that's why you're seeing those supply numbers go down. Our inventory number, these two numbers tend to get like intermixed. So when somebody says inventory and supply, you think they're talking about the same thing. Supply number obviously is a rolling 30 days. The inventory number is measured in an annual basis. So if we stopped everything right this second, how long would it take us to sell off everything based on what the whole year has been doing? So our inventory number also went down. These don't necessarily have to match each other, but a lot of times it explains what the market's doing. Our inventory number went down by a whole whopping 2 days, 5 days down to 123 days. And our active days on market over the last month stayed steady at 94 days on market, okay? These are the properties that just haven't quite sold yet for whatever reason. We're averaging out around that 94 days. Our closed days on market went down a little bit. There's a lot of reasons for that, but we went from 84 days on market down to 81 days on market. So you're going to see there's a whole lot of red on our screen today. And so that's something I want to just kind of remind you of what's happening over here. So like if we look back to last month that we went through, look at that. We had several all-time high numbers right there that went up. So what goes up eventually has to come down. And so we're seeing a lot of that this month in our numbers. So don't want you to be stressed out by the red. Red isn't necessarily good or bad. It just explains the market. And all it means is it went down from last month. So our active price per square foot number again went down. So we went down. Last month we were at 364 and some change. This month we're at 361 and some change. Want me to tell you what that means to me? I'll tell you in a minute. Sold price per square foot, same thing. You guys, last month, all-time record high. All-time record high. There was nowhere to go, probably, but down. We have hit our max affordability for right now in Arizona. We dropped down to $304.56 per square foot for our sold prices right now. Did we have some luxury properties sell last month that maybe didn't sell this night? There's so many variables to these numbers. So don't want you to panic. This is where we're at right now. Our average sold price, again, last month we were at an all-time high. That number came down to $613,000, $643. Our median sold. We came back down. This is a good thing. We came back down to $450,000. You guys, we have been sitting here, as you can see down in the bottom numbers, our median sold for 12 months at $450,000. We have been sitting at that number for about 2 to 3 years now. That number is telling us this is where the Arizona real estate market sits, okay? Half of our properties sold above that number, half of them sold below. This is where we are sitting. This is what Arizona currently can handle. Now, we have our properties above it, we have our properties below it, but this is where we are sitting. This is our affordability. This is where people feel most comfortable buying real estate in Arizona. Overall, this is such a big generalization that I am making right now because we are looking at overall numbers, everything in our MLS right now. All right, let's pop down to those average numbers. So our average sold in the last 12 months is $108,325, okay? And our median sold, again, we've been here for years, $450,000. Our appreciation numbers over the last 12 months, we have seen a 0.5% appreciation rate. That number went up from last month. It's great. Everybody's in the positive. Last 30 days, we saw a 2.9% appreciation rate in the last 30 days. So this is where we are sitting in the Arizona real estate market right now. Let me tell you, I'm going to stop sharing. You've had plenty of time to look at that now. Let me tell you what I think that means to me. All right. What I think that means to me is we've hit, like we peaked. Arizona real estate market, we peaked. Our normal seasonality sees us peaking in April. But we look at those numbers and what we see is that we actually peaked in March. What does that mean? Let me translate that for you. What that means is that we sell the most homes for the highest price per square foot. That's the peak of our market. Now, our normal market, we see the seasonality trend build from the beginning of the year. Our little graph goes up and then we peak and we start to see it come down, and it usually comes down and we bottom out August, September, October. Then we see it start to come back up a little bit, November, December, and then we see it fall off again until we start to build again for that next spring season. Historically, when we have normal markets, we see that peak happen April, May. But for the last few years, we've been seeing that peak sneak up a little earlier in the year. And unless something else changes, meaning like interest rates drop or something happens in the marketplace that prompts the market to move a little bit more quickly, I think we've peaked. All right. Sorry, I've been talking a lot today. So let me take a quick sip. Okay. Let's talk about a few things that I think are really, really important for you guys to know. And let's see. We already talked about that. Let's talk about, just as an educational moment here, what is a buyer's market in the state of Arizona? What is a seller's market? And what is a balanced market? Because there's a lot of confusion and different states have different numbers that they use. Okay. So in the state of Arizona, these are our numbers. When we have, and you guys, in fact, let me see if I can bring that back up for you, because I want you to be able to see that at the same time as what we're doing here. I'll bring that back up for you. Okay. So let's look at our supply and inventory numbers. Okay. So specifically the supply number. Supply number, when we see, and again, we are in I'm talking everybody. Everybody's market is so nuanced. We have got city to city, neighborhood to neighborhood nuances. So when I'm saying these things, I am not necessarily talking about your house or your city. I am talking about everybody. Generally speaking, right now, if you look at our supply numbers, we are in a balanced to a buyer's market. And let me explain to you why. In the state of Arizona, when we see 0 to 2 months worth of supply, we are in a seller's market. All right. If I went back, I don't have time to do it right now, but if I went back to some of those really, really old slides, you would see we'd be in like half a month, those kind of things. When we were in the really, really burning on fire hot market, stuff was churning and burning about as fast as it got listed. Okay. That is a seller's market. That's a runaway seller's market. A balanced market is anywhere from like that 2 month to 3 month, even 3.5 month of supply. All right. You can see that that's right about where we are. We're in kind of a balanced market, cheating towards a buyer's market. And our buyer's market is going to be anything that is 4 months plus. All right. So we are sitting right on that border of a balanced market to a buyer's market. Now, we haven't seen this kind of a balanced / slightly weighted towards the buyer's market in a really, really long time in Arizona. So I'm going to tell you guys, I think buyers, you are definitely running out of runway. If you want to take advantage of this market, you are running out of runway. And let me jump into a few more things and tell you why I feel that way. Okay. Let's talk a little bit more in depth about what we saw and what we're seeing right now. So our available listings comes in, we start May with 25,140 listings. That is a flat month down of like literally, it's only 385 properties less than we had in April. So therefore, this is the second highest total of available listings since we had May of 2014. And this is the 14th consecutive month for hitting the most available listings to the start of the month in 10 or more years. Inventory problem? Gone. So we're going to talk about that in a minute. But inventory is gone. There is plenty of stuff for the buyers to look at. There's plenty of properties for us to sell. It has been increasing for over a year. So the argument that there's nothing to look at, that there's nothing to sell, there's not enough inventory for the demand that we have right now, gone. That argument is so gone. Let's talk about what went under contract, all right? May starts with 9,367 properties currently under contract. That is the second lowest May opening since May of 2014. So what that tells me is what I told you guys before. We peaked. Unless something drastically changes, we already hit the peak in the Arizona real estate market. So I am suggesting that our seasonality peaked in late April for the last 3 years, but I think we peaked this year in late March. I think it moved up again. All right. So important things for you guys to take note of. The median days, again, half higher, half lower. The median days to getting your house under contract in the state of Arizona right now, if it's priced right, there's my caveat, if it's priced right, is 41 days on market. So buyers, if you're seeing properties sit on the market for more than 30 days, there's nothing wrong with the house. Nothing wrong with it at all. There's just the market is moving slower right now. This is the longest days on market since May of 2014, right? Our canceled and our expireds right now are nearly identical year to date to what they were last year. So we're not seeing a whole lot of people like running away from the market. Nothing has really changed. If I could call this market anything right now, is that it is stable. It's boring. It's flat. It's stable. It's not exciting. It's not exciting for anybody. You have opportunities to negotiate. You have a moment to take a breath and think about the purchase that you're making. You know, like it's just stable. It's methodical. Be choosy. All right, our closed sales for April. April closed out 7,736 listings. That's up 8% month over month. And it is the most closing since 2022. Right now, we are tracking for 76,000 closings for 2026, which is actually going to be a slight improvement over the last 3 years. But I am going to tell you that it's flat. So these are the beginning signs of a recovery. Buyers, are you hearing me? We're in the beginning signs of a recovery. Your runway is running out. We haven't been in a buyer's market, balanced market this long in the state of Arizona for a really long time. And we've been there for over 3 years. So if you haven't taken advantage of it, your runway is shrinking by the day. If you're looking for opportunity in the state of Arizona to have some negotiating power, it's now. It's now. You're running out fast, okay? Let's talk about homes that are selling. If you are in a hurry to sell your home, I just want to let you know that homes that sold within 30 days, right now they're selling for 98% list to sell price. If you're not pricing your house right, you're not going to sell that quickly. Sold homes in the 61 to 90 days sold for 95% of their listed price. And that may not be their original list price. That may just be the list price that they're at right now. Because right now we're seeing most of those properties that are sitting on the market more than 30 days have to do price adjustments. And when we're talking about price adjustments, we're talking again somewhere between $10,000 to $15,000 of price adjustments, maybe even more. So just be aware of that and listen to your agent. Listen to your agent as they are telling you where we should come to market. All right. The market is telling us where we should be. And you need to be listening to that. All right. Our listing success ratio right now, we are seeing 72% of all listings that go to market actually successfully sell. Those numbers are improving. They're improving. Again, signs that we're having we're at the bottom, we're recovering. Slowly but surely, we are seeing that recovery happen. All right. I want to close this out before we jump into the rental market, what's happening in the rental market for all my investor clients. I want to just share with you a report. This is a report called the JAX report. JAX. All right. And basically, I'm just going to read this to you because I think it's really kind of supports what I'm telling you about a recovery and some of the numbers that we're talking about. Okay. So the JAX report, just a summary of it. The result is a market where buyers are present. Sellers, listen to this. They are present, but they are highly selective. Highly selective. Demand is out there. It does exist, but it is being applied narrowly. If your property is not ready for market, if it is not priced appropriately, if it is not all the things, people need a turnkey, move-in ready property right now. If it's not that, you are not going to get top dollar for it. You are not going to have short days on market. Listen to your agent. All right, so there is a clear pattern that has emerged around timing and pricing execution. Homes that secure a contract within the first 30 days are achieving approximately 98% of their original list price, while properties that extend into the 60 to 90 day range are averaging closer to that 95%. That difference, roughly 3%, translates into $1,000 to $20,000 variance for many sellers. Price it right, or you're going to be chasing that market down. This gap is not simply a pricing issue. It reflects a shift in market behavior. Buyers are making decisions earlier and with greater conviction. These are prepared buyers. They are not just shopping the market. They are ready to make, they are serious buyers, kids. Serious buyers. Anybody in our marketplace right now? Serious buyer. Okay. So while properties that miss the initial window are viewed as higher risk, leading to increased negotiation pressure. The broader takeaway here is that the market is no longer defined by a simple supply and demand imbalance. Instead, it is being shaped by pricing accuracy and timing discipline. What's changing beneath the surface? There are several indicators that reinforce this shift. Okay, so we're looking at lots of stuff. We're not just pulling this out. We've got these indicators. All right. Rising closings confirm that demand is still active. Lagging contract activity signals that buyers are being more selective in their execution. The median time to contract has extended out to 41 days, reflecting a slower absorption rate, and elevated levels of cancellations and expired listings point to growing seller fatigue. Sellers, you gotta price it right. And you gotta be realistic. No, we can't go out there and let's just test the market. Let's just try that higher price. Nope, we can't. Okay. Collectively, these trends indicate that the market is rewarding alignment with current conditions while penalizing mispricing or delayed adjustments. Sounds like everything that I have just been telling you. All right. Now, let's switch gears just a little bit, and we're going to start talking to our investors. Who's got the rental markets out there? All right. So we get this information from one of my friends at Quantum Homes. Let's just talk about this really quick. The rental market is shifting. I love that for you guys. Rental inventory is tightening quickly. For a long time, you guys had like way a lot of inventory. And so the renters had way a lot of choices and a lot of negotiating power. So this tightening is creating stronger conditions for well-positioned listings. After months of elevated supply, you guys are seeing this start to rebalance for yourselves. So yay for you. Okay, here's some key market stats for you. Let's see, we've got 2,382 daily active rentals. That's down from our late 2025 peak, and it's down 42%. Yay, you. We've got 4,115 active listings right now. That is down 33.5% versus 6 months ago when you guys were seeing more, and that is 9.1% down year over year. Our closed listings, we saw in the month of April, 2,194 rental properties go under contract. That is down 23.6% year over year. Our average days on market, 52 days right now, that is down 8.3% month over month. Yep, there you go. And as always, our pricing strategy, it matters, all right? It really, really matters. So if we look at our average active rentals listed, right now we're at let me make sure I can see that correctly, $1.55 a square foot down, or that's actually versus what is going under contract. And the going under contract right now is $1.33 square foot. Okay, so that pricing gap between active and closed rentals, it's still existing, but it's narrowing. That is great. So correct pricing, sellers, renter, investors, hear us. Correct pricing is becoming more and more important as that market is tightening as well. So here's to summarize this. It is still in your interest because it's taking still the 55 plus days to get yourself a new tenant. And so if you price out, well, I just need this higher price versus what you're actually losing in the 2 months worth of rent, you're coming out horrible. So do everything that you can do to keep your current tenant if they are a good tenant, if they are paying their monthly bills. Do that, okay? It is still in your best interest to keep your tenant. It is the most cost effective, and you're actually going to come out ahead, even with slightly lesser rents than if you're trying to get that higher price. All right, as always, you guys, I am here to be a resource to you. If you have anyone who has questions about buying or selling in the Arizona real estate market, please do not hesitate to reach out to us. If you stayed to the end of this video, more power to you. You guys are incredible. I hope you got value. In fact, if you wouldn't mind putting in the comments below, what was the thing that you took away that was most interesting to you in this video? I super appreciate that. But as always, reach out to us. You can reach me directly at 480-415-41, or you can hit us up on our website, www.living48realestate.com, and follow us on all of our social media. Thanks so much for watching. We'll catch you next month.